talk to us about how the reforms that you've instituted support the reforms that have been instituted by the CBN in terms of capital markets, and how pension funds can now be a lucrative way of channeling money into Nigerian entities, assets and equities as well.
Thank you for having me today. Basically, when we started as an industry, we emphasized the need to invest pension assets in regulated markets. And therefore, the growth of the pension assets depended on reforms both in the capital market and the banking industry. To date, if you look at the investment regulation, virtually all instruments will have to be invested in a regulated market. And to that extent, even if they are bonds or other instruments, they must be either listed or quoted on the Nigerian Stock Exchange.
Now, a lot depends on the activities of Nigerian pension funds. Late in 2010, for instance, steps were taken to free up about $2 billion worth of pension fund assets to help direct money into the power sector, now that we're seeing power sector reforms and privatization as well. Do you see yourself playing a very key role, or the industry playing a key role in some of these initiatives?
In December last year, we reviewed the investment regulation after an extensive consultation with all our key stakeholders. And what we did was to introduce alternative asset classes. And one of the asset classes, basically that of investment in infrastructure. And power, of course, is part of infrastructure. As part of the revised regulation, we have up to 20% of the pension funds can be invested, indeed subject to the various requirements provided in the regulation in infrastructure, whether it is power or any other related infrastructure in Nigeria. So we believe the pension assets will play a significant role in addressing our infrastructure needs.
All right. Now, obviously, a lot depends on the flows that come through pension funds. Apparently, something to the tune of 40% of investments in the Nigeria Stock Exchange could be directed from pension funds. And this raises the question of Amcon and what it's trying to do to resuscitate liquidity in the market. Are you looking into investing in Amcon bonds?
Incidentally, Amcon, to the extent that is guaranteed by the government, it falls within the federal government securities, or securities guaranteed by the Central Bank of Nigeria. And indeed, they are covered by the regulation. However, as a regulator, we don't take investment decision. So the decision as to whether pension assets could be invested in Amcon or any other instrument is that of the pension fund administrators within the guidelines that have allowed for such investments.
And are pension funds looking into doing that? It is a lucrative area of directing monies?
Obviously, they are.
Let's talk about recent reports that suggest that dealers in the capital markets have been suggesting that there be a removal of guarantees on pension funds placements, and it's issues to do with the interbank market lending rates that have risen, liquidity concerns or fears of sell-offs in this particular area. Are those things that concern you?
I think basically, if you look at the history behind the guarantees, we came out from a banking crisis, and the central bank had to take decisive action to ensure confidence in the banking industry. And I believe the guarantees were provided, which have been extended quite a few times, to provide for that guarantee. Now that we have Amcon and other various reforms that have been undertaken by the Securities and Exchange Commission in the capital market, I believe eventually those guarantees will be lifted. And of course, pension fund administrators will decide whether to continue investing in some of these institutions or perhaps take another decision. But we are confident that the reforms being undertaken by the Central Bank of Nigeria will address most of these concerns that relates to the safety of the pension assets, particularly in those banks that have been restructured or have been managed through the supervision of the Central Bank of Nigeria.
Obviously, we know that there's been an improvement or an increase in the benchmarks for employer contributions into pension funds, into retirement annuities rather. But the whole question is that in Nigeria, there isn't a wide enough pool of savings and pension funds, and this creates a limitation as to the role that pension funds could be playing. As the regulator, is there something you could be doing about trying to create a system of more provident funds available for employees in the system, especially because a lot of people are employed in SMEs which can't take on the big requirements, and a lot of people in the informal sector as well?
we've just moved to the second phase of the pension reform. In other words, targeting the informal sector. Just about a month ago, we launched, together with one of the major trade unions, which is the Road Workers Union. They have about 2 million members, and they intend to go into the new pension scheme by way of a voluntary contribution. We want to pursue that. We've also been discussing with the various central unions in the country, like the Nigerian Labour Congress and the TUC, with a view to encouraging similar institutions or unions to convince their members to join this new scheme. And given the fact that the law also provides for minimum pension guarantee, we believe that will be an incentive for individuals who are self-employed to also start to set aside funds for their retirement as and when they retire. So obviously this is an effort we're pursuing jointly with the various stakeholders, including also our pension fund administrators, who have also gone to the various groups like market women and other trade associations with a view to registering them so that at least they can benefit from the new scheme.